Everyone's screaming, buy Nvidia. And look, Nvidia's great, but here's what Wall Street doesn't want you to know. The real money in AI, it's not being made in the chip everyone already owns. It's being made in the picks and shovels. The companies powering, building, and running the AI revolution that most retail investors have never even heard of. Today, I'm giving you 4 AI stocks I'm personally buying right now. And yes, I'm putting them above Nvidia. Let me show you why getting in early changes everything. Let me ask you something. When the California gold rush hit in 1848, who actually got rich? Was it the thousands of miners flooding in from every corner of the world, panning for gold in freezing rivers? Or was it the guy selling the shovels? It was the guy selling the shovels, every single time. And right now, in 2025, we are living through the greatest technological gold rush in human history, artificial intelligence. And just like 1848, everybody is rushing to the most obvious play. Everybody is screaming, buy Nvidia, buy Nvidia, buy Nvidia. And look, I get it. Nvidia is a phenomenal company. I'm not here to trash it. But here's the uncomfortable truth that most retail investors are completely missing. The real money, the life-changing, generational wealth kind of money, is not being made where everyone is already looking. It never is. So let's talk about what's actually happening underneath the surface, because this is where it gets really interesting. Artificial intelligence doesn't just run on code. It runs on power. Massive, almost unimaginable amounts of power. Right now, US data centers, the physical buildings that house the servers running every AI model you've ever interacted with, are on track to consume somewhere around 12% of total US electricity demand. 12%. And here's the part that should make you sit up straight. The US can barely produce enough electricity to meet that demand today. And we're still in the early innings of this thing. The next generation of GPUs, the chips that actually do the heavy lifting for AI, are the most power-hungry pieces of hardware ever built. We are not talking about a marginal increase. We are talking about an exponential leap in energy consumption per chip. So as AI scales, and it is going to scale in ways that would have seemed like science fiction 5 years ago, the single biggest bottleneck isn't going to be talent or software or even chips. It's going to be energy. And the companies solving that problem, that's where the shovel opportunity lives. That's why nuclear is making a massive comeback right now. We're looking at projections of 4 times the current nuclear capacity potentially coming online over the next decade. Government funding for nuclear R&D is surging. And it's not just governments. Look at what the smartest, most cash-rich tech companies in the world are doing with their own money. Google, Microsoft, Amazon, they are not waiting for the grid to catch up. They are going directly to nuclear operators and cutting deals themselves. That is not a coincidence. That is signal. That is Wall Street level capital making a very loud statement about where the energy for AI is going to come from. And here's what I've learned after over 20 years of watching markets. I don't try to be the smartest person in the room. I don't need to be. What I do is watch where serious institutional money is flowing before the news cycle picks it up, before CNBC makes it a headline, before your brother-in-law is texting you about it at Thanksgiving dinner. Because by the time it's mainstream, the easy money is already gone. Right now, the data is telling a very clear story. Smart money is rotating. It's moving out of the obvious AI trade and into the infrastructure layer, energy, data centers, grid technology, and the companies making it all possible. These are the shovels. And the miners, meaning the AI companies building the models, running the applications, generating the revenue, they cannot function without them. That dependency is not going away. If anything, it deepens every single quarter as AI demand accelerates. So while everyone else is fighting over the most crowded trade on Wall Street, the real opportunity is sitting right there in plain sight, hiding behind a layer of complexity that most retail investors don't bother to look through. But you're here, which means you're already thinking differently. And that is exactly why these 4 stocks are going to matter to your portfolio more than you think. Now, I want to talk about something that nobody in the financial media wants to have an honest conversation about. And that's timing. Not market timing in the old school, try to predict the bottom kind of way, because that's a fool's game, and I'll be the first to admit it. I'm talking about something far more powerful, far more actionable, and far more proven. I'm talking about getting into the right story before the crowd figures out it's even a story. Because here's the thing about Nvidia that nobody says out loud. Nvidia didn't make most of its investors rich. The people who bought Nvidia in 2019, in 2020, in early 2021, those people changed their financial lives. The people who bought it in late 2023, after every magazine cover, every YouTube thumbnail, every dinner party conversation was already about Nvidia, they're sitting on modest gains at best. And a whole lot of stress in between. The stock was already the most talked about trade on the planet. The easy money was gone. The risk-reward had completely shifted, and yet that's exactly when the majority of retail investors finally felt safe enough to buy in. That's not investing. That's following the crowd off a cliff and calling it a strategy. The single biggest multiplier in investing isn't which stock you pick. It's when you get in relative to everyone else. A 2x return and a 20x return can be the exact same company, just a different entry point. And the difference between those two outcomes isn't luck. It isn't genius. It's positioning yourself before the mainstream narrative catches up to the reality on the ground. So how do you actually do that? How do you find those early positions before they're obvious? This is where most retail investors get it completely wrong because they rely on news. They wait for the announcement, the earnings beat, the analyst upgrade, the viral tweet. But by the time any of that happens, institutions have already been buying for weeks, sometimes months. The price has already moved. You are not getting the opportunity. You're getting the aftermath of the opportunity. What you want to watch instead is money flow. Where is serious, institutional capital actually going right now, quietly, before the story breaks? Because institutions can't hide their moves forever. The data shows up, the volume shows up, the accumulation patterns show up. And when you learn to read those signals, when you start tracking where Wall Street's money is physically moving, rather than what Wall Street's analysts are publicly saying, everything changes. You stop reacting and you start positioning. And right now, those signals are screaming. The 4 stocks I'm going to walk you through are sitting in exactly that sweet spot, the zone where institutional accumulation is already happening, where the fundamental thesis is rock solid, but where the retail crowd hasn't shown up yet in force. These companies are where Nvidia was 3, maybe 4 years ago. Growing fast, structurally important to the AI build-out, under-owned, and still priced in a way that gives you real upside without betting the house. One of them is in the energy infrastructure space we just talked about, because the companies solving the AI power crisis are going to be indispensable for the next decade, full stop. Another is in data intelligence, the layer that makes AI actually useful for enterprise customers at scale. A third is in cloud and computing infrastructure, where the spending commitments from the world's biggest tech companies are locking in revenue streams that most investors haven't fully valued yet. And the fourth, well, that one might surprise you, because it's hiding in a corner of the AI ecosystem that almost nobody is covering right now. And that's precisely why I love it. Each of these picks targets a different part of the AI stack, which means you're not making a concentrated bet. You're building a diversified position across the infrastructure layer of the most important technological shift of our lifetime. That's not speculation. That's strategy. The window to get in at these prices is closing. Not because I'm trying to create urgency for the sake of it, but because the money flow data doesn't lie and the clock is already ticking. All right, this is the moment you've been waiting for. And I want to be really intentional about how I walk you through these, because this isn't about giving you a ticker symbol and sending you on your way. Anyone can do that. What I want you to understand is the logic behind each of these picks, the why. Because when you understand the why, you hold with conviction when things get choppy. And in this market, things will get choppy. That's not a warning. That's just the price of admission for life-changing returns. So let's build this out layer by layer. The first layer is energy infrastructure. We already established that AI runs on power, obscene, almost incomprehensible amounts of power. And the companies that are solving that problem sit at the absolute foundation of everything. Without them, the AI models don't run. The data centers go dark. The entire revolution stalls. That's not a peripheral role. That's the most critical role in the entire ecosystem. And yet these stocks are trading at valuations that don't fully reflect that criticality yet. The market is still pricing them like utility-adjacent plays, while the reality is they are the backbone of a multi-trillion-dollar technological transformation. That gap between perception and reality is exactly where the opportunity lives. When the market catches up, and it will, the repricing is going to be significant. The second layer is data intelligence. Here's something worth thinking about. AI models are only as valuable as the data they're trained on and the infrastructure that makes that data accessible, clean, and usable at enterprise scale. Right now, businesses all over the world are desperately trying to figure out how to actually implement AI in a way that moves the needle for their bottom line. And the companies that sit in the middle of that, the ones providing the data pipelines, the analytics layer, the intelligence infrastructure that makes AI actionable, those companies are seeing demand they genuinely cannot keep up with. Revenue is accelerating. Enterprise contracts are getting longer and larger. And the switching costs are enormous, which means once a customer is in, they stay in. That's the kind of business model that compounds quietly and then explodes when the market finally pays attention. The third layer is cloud and compute infrastructure. The announced AI spending commitments from the world's largest technology companies over the next 3 to 5 years are staggering. We are talking about hundreds of billions of dollars being deployed into compute capacity, and it has to go somewhere. It has to run on something. The companies providing that foundational compute layer, not the headline chip makers, but the infrastructure operators and platform providers sitting just behind them, are locking in revenue visibility that most investors haven't fully priced in yet. When you look at the forward contract structures these companies are signing, the revenue streams start to look less like tech multiples and more like infrastructure annuities. That is an extraordinarily compelling setup. And then there's the fourth pick. This is the one I'm most excited about, honestly, because it represents something genuinely rare in investing. A company that is structurally essential to the AI build-out, generating real revenue, backed by institutional money that's been quietly accumulating for months, and still sitting completely under the radar of mainstream financial media. The coverage is thin. The retail crowd hasn't found it yet. And the valuation still reflects that obscurity, which means the upside from here is the most asymmetric of anything on this list. I'm not going to oversell it. The fundamentals do that on their own. But when the story breaks into the mainstream, and it will, you'll want to already be sitting in your position, not scrambling to get one. Together, these four stocks give you something that's genuinely difficult to build. Diversified exposure across the full AI infrastructure stack, with institutional validation already behind each position, at entry points that still make mathematical sense. You're not chasing. You're not speculating. You're positioning in front of a wave that is only just starting to build. The miners need the shovels. The shovels need the power. The power needs the infrastructure. And the infrastructure needs investors smart enough to see it before everyone else does. You just became one of them. So let's take a step back for a moment, because I want you to really absorb what we've covered today, not just as a list of stocks, but as a complete picture of where we are in history right now. We started with the shovel principle. The idea that in every great technological gold rush, the real wealth doesn't go to the most obvious player, it goes to the infrastructure underneath it, the energy companies solving the AI power crisis, the data pipelines making AI actually usable at scale, the compute operators locking in $100 billion revenue streams that the market hasn't fully valued yet. These are not peripheral bets. These are the load-bearing walls of the entire AI economy. And right now, they are still priced like the market hasn't figured that out yet. That window does not stay open forever. Then we talked about timing. And I want to come back to this one more time because I think it's the most important concept in this entire conversation. Not because timing is everything. It isn't. Great businesses compound over long periods regardless of entry point, but because the difference between a good return and a generational return almost always comes down to one thing, where you position yourself relative to the crowd. The people who built real wealth from Nvidia didn't do it by watching CNBC and feeling confident. They did it by getting uncomfortable early, buying before it was obvious, and holding while everyone else was still debating whether AI was even real. That moment, that early, uncomfortable, high conviction moment is what we are living through right now with these four stocks. And moments like this do not come around every year. They come around every decade, maybe twice in a lifetime if you're paying attention. And then we went through the four picks themselves. Energy infrastructure sitting at the foundation of everything. Data intelligence compounding quietly behind enterprise contracts that are growing in size and duration every single quarter. Cloud and compute providers locking in AI spending commitments that give them revenue visibility most investors haven't priced in. And that fourth pick, the one still hiding in plain sight, undercovered, underowned, and sitting on the most asymmetric upside on this entire list. Four different layers, four different risk profiles, one coherent thesis. The AI build-out is not slowing down. It is accelerating, and every single one of these companies sits directly in the path of that acceleration. Now, here's what I need you to understand about everything we've talked about today. This is not hype. I've been an economist, a banker, a lawyer, and an investor for over 2 decades. I have seen hype cycles. I've watched them inflate, and I've watched them collapse. I lost 50% of my first investment because I didn't know what I know now. And I spent years after that learning to separate the signal from the noise, learning to follow the money rather than the headlines, to read institutional flows rather than analyst upgrades, to build positions based on data rather than emotion. Everything I've shared with you today comes from that discipline. It comes from the data. And the data right now is telling a very, very clear story. The AI infrastructure build-out is the single largest capital deployment event in the history of technology. Hundreds of billions of dollars are already committed, the beneficiaries are identifiable, the entry points still make sense, and the institutional accumulation patterns suggest we are still early, genuinely early, in a move that could take years to fully play out. Most people will watch this, nod along, and do nothing. They'll wait until it's on the magazine covers. They'll wait until their colleagues are talking about it. They'll wait until it feels safe. And by then, the best of the gains will already belong to someone else. To the person who acted when it was still early. To the person who understood that fortune doesn't reward the most cautious, it rewards the most prepared. You now have the thesis. You have the logic. You have the 4 picks and the reasoning behind every single one of them. The only question left is a simple one. What are you going to do with it?